happy to have you join us for the second webinar that we've arranged in the hope of providing some help to our colleague in the health professions who are together with us trying to help the same people through the insurance system on the way to recovery. So let's start with the review of the changes. I'm going to ask Jim Vigmond if he will begin by focusing on the changes in the med rehab area to the non-CAT insured.
Of course, the big change is the reduction in medical and rehabilitation benefits from $100,000 to $50,000, unless in fact it's a minor injury, and it's reduced further to $3,500. The $50,000 limit is further reduced by the cost of assessments. Now that's a new provision, and it's a substantial provision because, as we know, assessments can run into the tens of thousands of dollars in the complicated cases. Not included in the cost of assessments, so that will not serve to reduce the available limits, are IEs or income replacement reports, which can also be very expensive. We now know that under the new legislation, insurers are obliged in the non-CAT cases to report monthly. The expenses must be incurred in order to be recoverable. The attendant care, easy enough, used to be $72,000 over 2 years for the non-CAT case, $3,000 per month. Now it's $36,000 limit, $3,000 per month, so it has been halved. The attendant care must be incurred as defined, and the Form 1s can only now be completed by nurses and occupational therapists. In the non-CAT cases, housekeeping and caregiver benefits have been eliminated. In CAT cases, they will have to be incurred as defined. And of course, you can purchase the optional benefits. I can imagine insurance representatives sitting down with their millions of insureds and trying to explain the benefits of increasing the med rehab limit from $50,000 to $100,000. It's a theoretical purchase available to everyone, which I suspect won't be used by almost anyone. Indeed, the four of us were discussing beforehand over the years since we've had the system that we have now, how many people our clients have purchased these increased optional benefits, and it's less than 0.1% of our practices. The income replacement benefit, I misspoke, is now 70% of the net income. 70% of gross. It was 80% of net. I can't read my writing. We talked about the treatment plans, and it's been combined to now be a Section 18 and Section 22 forms, combined treatment plan and approval for assessment. And the difference is it can't be certified by a social worker. The insurers now have 10 business days to respond to a treatment plan as opposed to 3 business days. The OCF 19 application for CAT forms must now be completed by a physician or a neuropsychologist. And I think finally a change is that the weekly benefit, the caregiver weekly income replacement benefit, is now it's an irreversible election unless the person is subsequently deemed to be CAT. So that in a nutshell is the spectrum of differences between the new amendments and the ones which pre-existed September the 1st.
The original SABS changes were contained in Ontario Regulation 3410, and that was subsequently amended by Regulation 28910. There's a number of changes in here. One is, the first thing is the definition of minor injury as contained in the original SABS was revoked. And in its place, it's essentially the same definition, except it includes, the word includes has been added to it to clarify the definition, and I think I'm going to have to read the original to you and then the subsequent definition to clarify it. So the original definition was minor injury means a sprain, strain, whiplash-associated disorder, contusion, abrasion, laceration, or subluxation, and any clinically associated sequelae. To that has been added the words "and includes," so the word "includes" has been added, "and includes any clinically associated sequelae to such an injury." It's a technical change. It just tightens up the definition, eliminates any ambiguity, and as everybody knows, insurers are always saying it's these clever lawyers who seize on ambiguity and language in order to get around definitions. So. The next change I want to address in 289.10 deals with the definition of incurred expenses, and that definition has been changed. The original definition said that in order for an expense to be considered to be incurred, the person who provided the goods or services either did so in the course of his or her regular occupation or profession, or the person sustained an economic loss as a result of providing the good or service. The first part of that test has been revoked, the part that said did so in the course of his or her regular occupation or profession, and that's been replaced with the language as follows: did so in the course of the employment, occupation, or profession in which he or she would ordinarily have been engaged but for the accident. That, to me, is not very clear language. I think what the intention of this change is to eliminate the opportunity for, say a stay-at-home mother is providing care for an injured child. With the original definition, it was open to a lawyer to say, well, listen, Mom, you have to go incorporate a company or register a business name. You're now in the ABC Child Care Service. That's your regular occupation now, and you now can claim this benefit. So the intention of this change is to eliminate that opportunity for people post-accident to get into the business of attendant care or child care or housekeeping and homemaking. And if you weren't in the business pre-accident, you're not able to claim the benefit under that first branch. The next change deals with the requirement for reports to, originally the accounting reports for determination of income replacement benefits for self-employed or for employed people. Under the original language, it said the report had to be prepared by an accountant licensed to practice under the Public Accounting Act. That language has been changed to remove the requirement that the person be an accountant. Now, if the person is simply a member of a designated body within the Public Accounting Act, they qualify to do that report. Some of these are technical, but you'll have to bear with me. With respect to the definition of qualified case manager, that's contained in section 17 sub 3 of the original SABS, that definition has been revoked, and it's been replaced by essentially the same definition, but the word attendant care benefits has been added to the list. So it says qualified case manager means a person who provides services related to the coordination of goods or services for which payment is provided by a medical, rehabilitation benefit, or attendant care benefit. So the words "or attendant care benefit" has been added to the original definition. The definition contained in 25 sub 5 sub A of the regulation has been clarified as well. And this is the section that deals with the maximum amount chargeable for an assessment. And as we all know at this point, it's been capped at $2,000 for everything other than accounting reports, which are $2,500, I believe, Jim. But what the clarification is, it says that the insurer is not required to pay more than $2,000 in respect of fees and expenses. So the "and expenses" has been added, and it's for conducting any one assessment or examination and for preparing reports in connection with it. What this does is it clarifies that the insurers are not going to be required to pay anything above the $2,000, and that includes things like mileage and parking, and includes things like interpretation services. So if you have somebody who doesn't speak the language of the assessor, and an interpreter is required. That is all going to be contained within the $2,000 definition. Unfairly so, but that is the case. The last change in this regulation deals with who can conduct catastrophic assessments, catastrophic impairment assessments, and it's a physician in all circumstances other than if the person has only an acquired brain injury, and in that circumstance it could be a physician or a neuropsychologist. The clarification that is inserted in this most recent change says that the physician or the neuropsychologist, as the case may be assisted by other regulated health professionals as he or she may reasonably require. So it is opening the door to assistance from other health professionals. It'll yet to be determined whether or not it's $2,000 per assessor. So that is the impression I get. It's the impression I think is shared by the panel, but it's yet to be determined. The next regulation, Ontario Regulation 290/10, is the next regulation I want to address. And as we all know at this point, Bill 16 was introduced. It's called the Creating the Foundations for Jobs and Growth Act, and it received royal assent in May of 2000. It eliminated tort deductibles and fatality claims, and it also changed the income loss calculation in lawsuits from 80% of net to 70% of gross. And what this regulation does is it provides a definition of how that 70% of gross is calculated. And lastly, we have Ontario Regulation 291/10. This regulation amends our revised regulation of Ontario 664. And what it does is it amends the dispute resolution expense schedule and indicates that the amount that can be claimed for preparation of an accountant's report has been increased from $1,500 to $2,500.
John and the rest of us have done a lot of thinking about this since the last webinar. John in particular has really applied his mind to it. So John, let me turn it over to you, and please give us your take on the scope and the breadth of this minor injury category.
One of the scary things is that the insurance industry expects that 60%, I've even heard a figure as high as 70%, of people who qualify for accident benefits will fall into this category. And as we all know, I mean, the benefits are dramatically reduced from what was otherwise available. It's not even the $50,000. It's down to $3,500. Another thing, too, if you look at the definition of minor injury, I don't know where they came up with the name for minor injury, but some of these injuries are anything but minor. Dale gave you the first part of the definition, but listen to another part of it. Sprain means an injury to one or more tendons or ligaments, or to one or more of each, including a partial but not a complete tear. So is a torn anterior cruciate ligament a minor injury, sort of as we all think of it? I don't think so. There can be some pretty significant implications for that individual, depending on occupation and whatnot in terms of function. Will this definition also catch something like a rotator cuff? On a reading of it, it would appear that it might. It's a very, very significant injury. Another part of the definition includes whiplash-associated disorder. And there's two things that they exclude from a whiplash-associated disorder. And one is a whiplash-type injury where there's a fracture or a dislocation of the spine. You would hope that would be excluded. But here's another aspect of a whiplash-type case that is excluded. Someone who does not exhibit objective, demonstrable, definable, and clinically relevant neurological signs. So a person can have objective signs of an injury. They can have straightening, say, of the normal lordotic curve, show muscle spasm. There can be muscle spasm. There can be swelling. That's all objective, but it's not neurological. Is numbness and tingling neurological? Yes. Is it objective? We'll talk about it. So what would fall within that definition? Is it a nerve conduction study like, say, electromyography? And then remember, there's got to be some positive signs which have to be clinically relevant. Maybe an MRI, maybe a CAT scan. I don't know if reflex tests fall into the objective category or not. So there's some real issues with respect to that. Now, is there a way out of the definition? Maybe. And so, what is an impairment that or an injury that does not come within the guideline? It's one, if the injured person's health practitioner says or provides compelling evidence that the injured person had a pre-existing medical condition that will prevent the person from achieving maximal recovery from the injury, unless he gets more than $3,500 in goods and services and med rehab. So, what is that? Is that arthritis? What is it? So there's all sorts of issues with respect to how you interpret this minor injury, and I think we're going to talk about it more later. But as I started off saying, it's pretty significant because of the serious injuries that can be caught by this definition.
We can't discount the potential detrimental impact that this provision will have, even though it's called a minor injury. First of all, it speaks about the injury being, or the impairment being, predominantly a minor injury. So if in addition to the wrist strain, a person has got something else that perhaps is more significant to that person, then we can get outside of the minor injury guideline because the predominant impairment is in fact something else. The phrase, I think, which will take on the greatest amount of significance in terms of future litigation is any clinically associated sequelae, because the definition otherwise is a sprain, strain, WAD, which I think is WAD 1 or 2, contusion, abrasion, laceration, or subluxation. So if a person has got a WAD 1 or WAD 2, after 6 months is not getting better, is impaired from performance at work, develops depression, develops chronic musculoskeletal diffuse pain, then gets a diagnosis of chronic pain syndrome, our argument is that that is independent of any sprain or strain. It's an independent definition. It's an independent impairment and disorder. So that it is not clinically associated with the sequelae, or as sequelae of a minor injury. So that is going to be the focus of, no doubt, litigation between plaintiff's bar and the defense bar, and it will take a number of years for that to be clarified. The last point I would make is that we have to be wary of trying to put too much evidence on an insured's health practitioner providing compelling evidence that a pre-existing condition, for example, degenerative arthritis, is going to restrict a person's ability to achieve maximum recovery if they're restricted to $3,500. Because maybe we're talking a $10,000 or $20,000 med rehab benefit one would ordinarily want if they were not subject to the $3,500 cap, and at the same time we're going to be providing ammunition for the tort defense insurer that it's the pre-existing medical condition that's responsible for the need for the treatment and potentially the need or as the cause of the impairment. And I know that we should still be successful in terms of the material contribution test, but we're creating barriers that we might not otherwise have to create. So I do agree with John that it provides some very perplexing situations, and the analysis is a difficult one and will certainly lead to some ongoing litigation.
John, a question that has come in from our audience is whether, like the $50,000 med rehab limit, where it comes to a minor injury limit of $3,500, are assessment costs included as part of that $3,500?
I say they are. Have you looked at that, Dale? Or
I believe they are.
yeah,
believe so.
they are.
Yep.
They are.
I think
So
it says
can you
it right
imagine?
in the definition.
Can you just imagine?
So if an assessment or two is required for the treatment plan, there's not going to be a hell of a lot left for treatment, is there?
Much.
Unlikely, probably, that there would be assessments at that level.
Well, how does the treatment plan get submitted if one's required without an assessment?
Well, there's a prescribed bundle of benefits. John, there's different stages that of pre-approved funding and
see.
services.
It's divided into 4-week periods, and there's certain amounts in the 4-week. I don't know that we have to get into that,
Okay.
Roger. That's getting really technical. You want to talk about ways that we plan to deal with that with this type of situation, or we can
What are we as lawyers advocating for these folks who might fall into this definition? How are we going to work with healthcare professionals to help the healthcare professionals and to help our clients with this particular area of these changes? Any thoughts?
Well, I think Jim hit on it with the fact and the reality that any time you get new legislation and any time you get a new definition, you're looking at years of arbitral decisions and court decisions to interpret the definition. And as like most definitions, they tend to be watered down over time. The reality is in the early going, insurers will want to test this definition, and we will face a slew of denials. And those people that are going through the process first will suffer the most. The reality is, can we work with healthcare providers? When you have a viable tort case associated with your claim, you can, as long as you have a health provider who's prepared to be part of the lawsuit, take a deferral in payment, and present that claim as an out-of-pocket expense in the course of the lawsuit. When it comes to denials, the reality is the dispute resolution process is there, it's available to people, but it's not a fast process. It does take time for those decisions to be reached and for the interpretations to be made.
Yeah, I believe from what our accident benefits specialists in our office are telling me that the wait for a mediation from Fisco these days is 9 months.
Yeah.
So God knows what it's going to be if we start seeing a huge increase in denials that have to be mediated.
I think you will.
Yeah, I've been urging Fisco, if you're out there listening, to do away with mediations where insurers and insureds agree that the mediation is not going to resolve anything, because that would substantially reduce your backlog and make the process meaningful for people who need resolution of these issues much more quickly, particularly under this new regime. John, have you got any further thoughts on what we're going to do with this?
Yeah, I mean, in reality, it might be considered a minor injury and accident of benefits, but someone with a torn medial collateral ligament or ACL or whatever is going to meet the tort definition of permanent and serious when it comes to the threshold. So if it's a viable liability situation and there's a good tort case, what are we as lawyers going to do? Start a tort case. We're going to say our guy's got a torn ACL. He falls within the definition of minor guideline, maybe. He's had some physio, but he can't go back to his job as a construction worker. He needs some upgrade. He needs the whole vocational package. There's no money. He needs money. Mr. Defense lawyer or insurance adjuster or Miss, would you please advance our client $10,000 or $20,000 or $30,000, whatever the case might be. We will account for every dollar of it. It's not going to be spent on going to baseball games. We'll account for every cent. We'll provide you with receipts, so our client can mitigate his or her damages. And if he or she can't mitigate his or her damages, the claim will be larger. We'll tell the circumstances under which our client was unable to do that, and it puts you, the defense lawyer, in a very uncomfortable position. So that's one way where money could be available, and hopefully responsible insurers will recognize that and work with the injured person in some of these situations.
One other point, in following up on John's excellent point with respect to approaching the tort insurer, and that also brings to mind another point, John, and it would be hard to imagine a judge or arbitrator finding an injury to be a minor injury and at the same time another judge finding it to be a permanent and serious impairment and crossing the threshold. But in addition to funding from the insurer, if there's a viable tort claim, again, law firms like ours, other experienced firms that do this, they are prepared to fund it as part of funding the tort claim. There are third parties out there, corporations, banks that will fund this. There's protected accounts in terms of some of the caregivers, some of the treatment providers. So there are some ways, but in the absence of a potential tort claim, these people are in trouble.
Yeah, I don't think there's any question about that. If you're a physiotherapist or a speech-language pathologist, whatever your role is, you don't want to become necessarily an advocate for some poor patient or client who doesn't have a lawyer, has a smaller claim, no tort claim going along with it, and there are denials. I don't think there's any question, and we all agree that there is a population out there, people yet to be injured, who are going to be left in the cold by these changes. So having said that, and facing the reality that this presents to us, Dale, can you give us some of your insights into what brought this on? Why did the insurance industry ask for these changes, and why has the government gone along with the request?
That's a big question. I mean, the reality is the product's looked at every 5 years as part of the 5-year review. The 5-year review took about 2 years to complete. And when you get into the process and you look at the financial data that's published, and it's published in something called a Green Book, you realize that something needed to change with the product. Either dramatic premium increases had to occur, which the government simply doesn't have an appetite for, and neither does the majority of the motoring public simply couldn't sustain a dramatic increase in premiums, or changes had to be made principally to the accident benefit product. The government has tried to sell these changes as choice, and I think that's trying to put a good spin on a bad situation. The reality is there's no choice for a lot of people. For people who don't have auto insurance, your cyclists, your transit users, people who simply can't afford an automobile and automobile insurance, they don't get a choice of buying the expanded benefits. They're simply stuck with the basic product. And the reality, as Jim was saying earlier, and we talked about 0.1% of the people that we see have purchased the optional coverages available ever since Bill 59 was introduced back in November of 1996. So that's just spin, in my opinion. But the changes were necessary, and if you look at the last 2 years leading up to the end of 2009, the data shows just dramatic increase in costs for accident benefit coverage. The claims frequency just in 1 year alone, from 2008 to 2009, increased by 10%. So there was a 10% spike in accident benefit claims. From 2007 to 2009, the cost per vehicle of accident benefit claims went from $390 to $588. And the claims ratio, which means for every dollar that the insurance company takes in, how much do they have to pay out for accident benefit coverage? The claims ratio went from 102% to 142%. So for every dollar taken in on the accident benefit side, in 2007, $1.02 was being paid out, and by 2009 it was up to $1.42 of costs incurred with delivery of the product. So that's obviously not sustainable in any business. The question is, well, what should have been done and what needed to be done? And the approach taken is really taking a sledgehammer. It's a very unsophisticated approach. Yes, you will definitely decrease the cost of the product if you cut the coverages in half. There's no science to that. You charge the same amount, you deliver half the product, you're going to see an increase in profits. But the reality of the situation is that there are problems with the product. It's overly complex. The transactional costs were exceptionally high, and a fine-tuning approach in terms of eliminating those transaction costs is the approach that the various legal organizations were advocating for, but that's not ultimately what we saw. The government says that the problem is fraud and there's gaming in the system, and I'm not going to suggest that there isn't some fraud, but is that the predominant reason for these changes? And I submit it can't be. If you look at the difference between various companies, it's telling. So when you're just dealing with accident benefit coverage, State Farm had a horrific claims ratio, 222%. So for every dollar that State Farm took in, the cost was $2.22 for delivery of the accident benefit product. That was in 2009. Cooperators had a 92.3%. So for every dollar they took in, it cost them 92.3 cents.
And that's fascinating, without getting too deeply into this, because I think we all find that that particular company is one of the fairest companies as far as their insureds are concerned.
Well, and they're both big companies with big market share. The discrepancy between those claims ratios is unexplainable. I mean, if you're going to lay it off on fraud, are you saying that all of the fraudsters shop at State Farm and not at Cooperators? I think it's more telling to look at claims practices, and Roger raises a great point about how Cooperators is one of the high-class companies, and they're one of the companies that are a pleasure to deal with, and they apparently are able to make a go of the current accident benefit product, or pre-September 1 accident benefit product.
Well, thanks, Dale. I guess what we all agree on is that the reality is here. We're all in this together with the insurance companies. We want to find the best possible way to serve our clients, but everybody up here agrees, without having a brief for the insurance industry, that the industry has to make a profit, and a fair profit, and somehow we all have to work together and hope that they do, but that the government and the courts and the regulators at FSCO remember the needs of what we call accident victims at the same time.
Well, the good news is that the financial data that's put out by the Office of the Superintendent of Financial Institutions has reported second quarter profits for 2010. Industry-wide, there's a $1.54 billion profit. So the tide has already started to turn. A lot of that is attributable to increases in the return on investment, as well as we've seen premium increases that are starting to filter through. This is good news because what hasn't been affected so far is the definition of catastrophic impairment, and that is very much still a live issue. With these profit numbers that we're seeing, even before the September 1 changes start to filter through, hopefully the government will take a more compassionate approach to the definition of catastrophic impairment.
Dale, does it make one think that the draconian changes that were made, I mean, maybe were premature and maybe not necessary?
Well, time will tell, John. I think
I guess it will.
I think if I was in the prediction game, I would predict significant insurer profits over the coming years.
Well, I'd love to see the definition of catastrophic impairment eliminated, a new category of serious injury where everybody who has a serious injury is going to get the catastrophic limits, but that's for another day. Is the role of the adjuster going to change under this new regime?
Unquestionably so. I know that insurance adjusters have been beleaguered by changes over the years, and as opposed to being claims adjudicating, they've been more claims processing. That's all about to change. In fact, as of a couple of days ago, has changed. We now know that an adjuster may deny benefits without having IEs. That gives them great power. With power comes responsibility, and they're going to have to document their exercise of responsibility in every instance. They now have 10 days, or 10 business days rather, to consider whether to approve a treatment plan or not. So they have to do so with the interests of their insured in mind. And they will know, of course, their obligations and their fiduciary obligations to their insured. So that is going to create an opportunity for us in course of monitoring the file to ensure that adjusters are held to account for the exercise and the fair exercise of their responsibilities. In the event that they choose to deny a treatment plan without an IE, then they have to be asked, why did you not do one? We had evidence which did only support the treatment plan and the recommendations and the need for treatment. We will reinforce the fact that early treatment affects outcome, that their decision is certainly harmful to their insured's longer-term interests and that type of thing, so that along the way we will have to make sure that the insurers are reminded that they will be held to account for their decisions. But their role has changed and has gone back to the golden years.
Most adjusters do want to do a good job. They do. They are hungry for information about the nature of the injury and what results from that. If they ask us for hospital records, they're going to get them from us in a heartbeat. If they ask us for the person's family doctor's clinical notes and records going back for a number of years before the accident in question, they are going to get that from us. The other thing, I mean, we're not going to treat it as an adversarial situation. You know, it might get to that, but They're going to get tons of cooperation. The discussion hopefully be, well, we're looking as a goal here to help this person get what they need, and because there are no IEs, as was said earlier, but just reiterated, I mean, if there is a dispute, you get into the application for mediation process, and then the process after that. But that is so time consuming. That's not really a viable option, especially in the early going.
Let's assume, in a simple example, a physiotherapist sends in a treatment plan. It's denied. There's no requirement for an IE. What do you do?
Well, I agree. You should try to take a conciliatory approach, because the reality is the adversarial approach is a time-consuming one, and the person needs the treatment. But if it is going to become adversarial, the lawyer needs to be involved. Accident benefit coordinators are great. Ours do a fantastic job, as do the ones at Oatley Vigmond. But when it boils down to it and things aren't going to run smoothly, I think you need to write a letter to the insurance adjuster. Number one, advise them or remind them of their obligation to treat their person, their insured, with the utmost good faith. Bad faith exposure is a reality. So if somebody is acting arbitrarily, capriciously, or in a high-handed, vicious, malicious manner, they will be held to account by the courts or by an arbitrator. In your example, Roger, where your physiotherapy treatment plan is denied outright without any sort of countervailing opinion, I think you write to the insurance adjuster. You advise them that this will have a detrimental effect on my client's recovery. If it's a big enough dispute, I might ask the physiotherapist or a physician to write a letter saying, what are the consequences of failing to treat, and send that to the adjuster. You want to continue to put pressure on this insurance adjuster to revisit the decision, or to at least put enough pressure on them to make them want to send it out for an opinion, because it may well be that when it is sent for an IE that it is approved. I think you can write to the insurance company ombudsperson and say, listen, here's all the evidence. We have a treatment plan. We have a physician who endorses the treatment plan and says these are the consequences of not providing this sort of treatment, and your adjuster's doing nothing. What are you going to do about it? You can write to the insurance company, ask them to agree to fail the mediation without having the delay, and let's get right to arbitration, and to speed that process up if they're not going to ultimately get into a situation where they're going to revisit the decision.
Dale raised a great point about getting a letter from the physiotherapist. Essentially, what will happen to this person if he or she does not get physiotherapy? And yeah, you can certainly use it in dealing on the accident benefits issue. But remember, you can, if there's a viable tort case as well too, you can send that off to the tort adjuster or tort lawyer, and something like that may be admissible ultimately at a jury trial. And physiotherapists say, we'll go in as a witness. Yeah, we said the person needed physiotherapy and the consequences to the person if he didn't get it. And they didn't get it, so here we are, and the person has not been able to mitigate. Jury will not take kindly to that kind of treatment, and it might impact on damages in that they'd be higher than they otherwise would. And I think a defense lawyer and defense in tort and a lawyer might well, in those circumstances, consider making the advance payment that we talked about earlier.
If you're injured after September the 1st and you've yet to renew your auto policy, you're still entitled to $100,000 for med rehab. You're still entitled to $72,000 for attendant care, and you still have access to the housekeeping, homemaking, and caregiver benefits. Once you've renewed your policy, then you're stuck with the reduced benefits. The changes in definitions, so things like incurred, those apply immediately. For people that have had an existing claim, you were injured 2 years ago, you want to make a claim for ongoing for attendant care, and it's your spouse providing it, you're going to face this definition of incurred. So those are called procedural changes, and the procedural changes become effective on September the 1st, and they do apply retroactively.
The questioner says, I'm very concerned about the $2,000 cap on assessments. And certainly you're not alone with that. It's detrimental to clients who live farther away or need an interpreter. How are your firms dealing with this discrepancy and the cap on assessments? Jim, you want to start off with that one?
Well, that's a great point, particularly where there's travel expenses involved and they have to travel distances, as in the far north. Translation services are something that are not specifically dealt with in the regulations, and I think you have to appeal to the interests of the insurance company in the fairness and good faith and in treating their client with the good faith that's required. So I would argue that in order to access that, to benefit that $2,000 cap, that if there's any interpretive services required, that they'd be over and above that. I don't know, quite frankly, how successful one would be, but there's little that otherwise can be done because the regulation has been amended. It used to be $2,000 for the cost of an examination or an assessment, but now they've said an examination, assessment, or a report. So it's quite clear that the cost of the report is included in that $2,000. So it's a bit of a waffly answer. Beyond that, I can't say much more.
Yeah, I think the more telling point is that the definition was amended to include the words "and expenses." So it's the insurer is not required to pay more than $2,000 with respect of fees and expenses of conducting any one assessment or examination. So I think the short answer is it likely will not be required. The insurer, of course, is free to pay for things outside of the $2,000 if they choose to do so, for such things as interpretive services if they want to do that. In most circumstances, I don't think we're going to see that, and I think what is going to happen is that the burden will come back to the law firm, that law firms are going to pay for the reports that they need, just like we always have, and we'll hope to recover it at the end of a successful lawsuit.
Yeah, I think there is room to argue, notwithstanding the amendment, that it is not a part of an examination or an assessment to be able to communicate with somebody. So I still think there's room to argue that. I just might add, Roger, that I think it's fair to predict that there will be increased emphasis on catastrophic impairment and leveraging that. There's no question our firms here involved and all the law firms that do a lot of this work always have that top of mind, that the catastrophic impairment definition is critical to the long-term interests and, in fact, the short-term interests of the client and your patients. With that in mind, the legislation, as Dale has said, has not changed in any significant way, other than a single limb amputee now qualifies for catastrophic impairment. But the more cases that have been come along out of the courts and out of fiscal have been to the benefit of insureds in ensuring that there is fairness in assessing people that may be catastrophically impaired. And I don't think we're going to get into all of the details of how they do that, but a lot of the healthcare practitioners can form a critical piece in ensuring that a person is ultimately qualified as being catastrophically impaired. And it's very important that those of you that are involved keep really good notes and keep track of the various deficiencies, and at the time that the catastrophic impairment assessment is undertaken, those will find their way where they have to be found, and catastrophic assessments will be done. And some people are surprised that some people are in fact qualifying for being catastrophic. So I won't get into all of the details, but the cases have really been supportive in combining psychological, psychiatric, and physical impairments to allow people to get to the threshold of catastrophic and then establishing the need.
We've talked about the bad faith claim being the ultimate hammer that we can bring down where an insurer is behaving somewhat outrageously, and it does happen. But this questioner has asked for an example of what a bad faith claim might look like. We can all tell you that we've seen some that you wouldn't believe, but is there someone who can just describe in general, very conceptual terms what a bad faith claim is? John?
Just say, for example, where there's compelling evidence that the injured person does need treatment or does need some kind of benefit, and the insurance adjuster just arbitrarily denies the benefit. That's it in its simplest forms, and then then the lawsuit is what you sue for bad faith, but what do you sue for? The damages that flow from that.
Yeah. Bad faith is really something that, as an area of law, developed legs with the Whiten and Pilot case, which I think is about 10 years old now. It was a 2000 or 2001 Supreme Court of Canada decision. Basically, what that case says is that a contract of insurance is one of the utmost good faith. The insurance company's obligation is to treat their insured person when they're making a claim with the utmost good faith and not to put their business interests ahead of the interests of the insured person. And before Whiten was this case that awarded $1 million in punitive damages to a person who lost their house in a fire, and it was a situation where the insurance company had information that the fire was an accidental fire, and they had evidence to that effect, and they asked their expert to write a different report saying that the fight was arson, that it was set. And that all came out in this court decision, and ultimately $1 million punitive award over and above what would have been required to be paid under the contract was awarded. And as a result of that, it really changed the way adjusters handled their claims. When that case came out, we started a whole slew of bad faith litigation was started because the monetary value of those claims increased dramatically. Before Whiten, you'd see $50,000 awards as being the high end of the range for punitive damages, and it went up to $1 million. And you would see the most outrageous things in the insurance adjuster's files, like handwritten notes calling the claimant a dummy, things like that, or just arbitrary, capricious decisions not based on anything. And the bad faith litigation really changed the way those claims were handled.
Does the services of a social worker fall into the minor injury category? Who'd like to deal with that one?
Jim, why don't you take that one away?
Yes. Yeah. The limit is $8,500, or sorry, $3,500 for all treatment.
All treatment. Our assessments that were under the OCF 22 before, and now under an OCF 18 under policies that were pre-September 1. So the insured person doesn't lose the substantive right to the $100,000 limit. The question is whether the cost of the assessment will be deducted from the $100,000 limit as a procedural change instead of being in addition to the $100,000 limit. That's a good question. Your thoughts on that,
Great
Dale?
question.
A great question.
I'm not sure I know the answer to that one. I think it is a procedural change, and my gut tells me the insurers will be taking the position it's costs of assessments post-September 1 are coming out of the $100,000.
And of course the insured will argue, but that's affecting my substantive rights.
Yeah, I think that one might be a situation where we're going to need a few decisions to interpret it.
Interesting question. They're all interesting. And once again, we're feeling a little bit frustrated up here because there's so many great questions and we're running out of time. The question, do you think these changes will increase tort claims in general. How will this affect future care cost reports and life care plans? I think everyone has a comment on that. Let's start with you, Jim.
Yeah, that's a great question. I don't think that we're going to see an increase in the number of tort claims. We may see an increase in the incidence of future care costs because there will be less paid as part of the accident benefit system, particularly if it's a minor injury and it goes on to cross the threshold so that there is a viable tort claim. So it will be offloading some of the future and including past care from the accident benefit insurer to the tort insurer. So I see an increase in the quantification of the loss that the plaintiff has suffered as a result of that. So I think the tort people are going to be paying out some more money.
Yeah, I agree. I think you're going to have serious injury cases that are not catastrophic, where the $50,000 will be exhausted in the first year, potentially, or the first 18 months or 2 years. And you'll have a person who's in need of care, and those people will find a way to get funding for them, whether it's through one of the various means we talked about, litigation, loan, having a special damage or an out-of-pocket claim. So I think the value, what we traditionally haven't seen in lawsuits are claims for special damages, meaning claims for out-of-pocket expenses, because for the most part, people's claims or their med rehab claims have been paid as they go. With the elimination of housekeeping and homemaking benefits, with the elimination of caregiving benefits and non-catastrophic injury claims, and with the reduction in med rehab, I think you're going to see significant past claims. So when people get to trial, they're going to have significant past health care claims to advance. There's going to be claims from people who had to have their grass cut and had to have their snow shoveled, and they're going to be presenting those claims, and you will see a shift of that burden from the accident benefits system to the tort system.
We are out of time, and on behalf of John, Dale, and Jim, I want to thank you for joining us. We all sincerely hope that you found this of benefit.